Despite the current tough market conditions for Tesla, which have caused the car company to struggle to meet up with its quarterly earnings and deliveries, Ark Invest CEO Cathie Wood still believes that the car company is doing incredibly well compared to its competitors. Ark's flagship fund, which is down more than 60% so far this year, now holds more than 3 million Tesla shares worth about $739 million. The investment company remains firmly bullish on Tesla and thinks that it can withstand weakening economic conditions as it gears up its earnings in the coming months. Hey everyone, and welcome back to Everything Tesla Stock. Tesla has been battling serious market downturns in the past few months, and the stock has equally suffered as it has recorded serious periods of dips these past few weeks. However, American investment management firm Ark Invest and its CEO Cathie Wood believes that Tesla stock will record higher values in no time. In April, Ark disclosed that it expects Tesla shares to more than quadruple to $4,600 by 2026. The investment firm also revealed a price target of $3,000 for Tesla stock by 2025. While the company has since updated its price target amid new expectations around Tesla's performance, it had considered several critical factors which will likely cause the stock price to soar into the thousands. It did note that factors such as Tesla's FSD capability and potential robotaxi business will contribute highly to these new estimates. What does Cathie Wood think about Tesla stock? Keep watching to find out. But before we get into it, if you like this type of content, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on in the world of Tesla. Tesla has the largest holding in the Ark Invest ETF fund, claiming some 10% of assets compared to 8% allocated to Zoom video communications and 7% to Roku. According to recent data, Cathie Wood held 4.08 million shares as of the 30th of September, which represents her highest holding with a 7.55% weight. Wood is known for investing in disruptive innovation stocks, of which Tesla perfectly fits the bill. The car company has taken over the automotive space with its innovative EVs and self-driving technology, and is set to scale even higher in the future. Cathie Wood has long been a fan of Tesla stock, which she claimed in her third quarter letter is a top performer on her portfolio. In October, Wood disclosed via a flagship Ark Innovation ETF that she'd bought 66,190 shares of the EV manufacturer. The purchase was valued at $13.7 billion based on Tesla's closing price, and was the second time she'd added to her investment in Tesla this month. Before this, Cathie Wood scooped up a combined 132,213 shares of Tesla, which were worth about $32 million based on the stock's closing price at the time. The transaction came after Tesla released its third quarter deliveries, a record of 343,000 vehicles, up from 241,300 a year ago. Although several analysts were quite skeptical about the automaker's performance, seeing that it had fallen short of analysis expectations of 365,000 deliveries in Q3, Ark Invest still seemed to remain bullish on the car company. While Wood did admit that all stocks are experiencing difficulties as the markets try to understand how far the FED is going to go and how deep the recession will be, she did however note that Tesla's competence to scale through the tough times was worth keeping an eye on. Wood noted that innovation will help solve the problems with supply chain issues as well as the food and energy crisis. According to Wood, there's been an acceleration towards consumer preference towards electric vehicles like Tesla because of oil prices, and she believes that the trend isn't stopping soon. She further stated that while there is a problem with oil prices, she does think Tesla is the solution. Do you think the same? Let us know down below. Don't forget to like and subscribe and turn on notifications. Wood has cited that the need for Tesla to cut down costs to boost sales is very important. She claimed that going by the recent concerns about Tesla's demand, the car company can vastly increase its sales by cutting the cost to make its EVs by 50%. She stated this in an email to investors, adding that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. With electric car prices reduced, Tesla could make its cars more affordable and increase revenue in the long term. While this is a valid approach, Tesla will have to get a stronghold of its supply chain to be able to cut down on production costs. The cost of raw materials has since been on the high side, owing to inflation. If Tesla can obtain these raw materials at a lesser cost, then it might be able to reduce its car prices. In March, Core Lithium announced that it had entered an arrangement with Tesla for a potential supply of 110,000 tons of concentrate from its Finesis lithium project in Darwin. Also, according to recent news, Tesla had agreed to buy $5 billion worth of nickel production from Indonesia over the next 5 years. Lithium and nickel are very important for the EV industry, and therefore, Tesla wants to sell 20 million cars by the year 2030. Well, it's going to need a lot of raw materials, especially nickel, which is a key component in electric batteries for cars. The secret behind Tesla's goal of selling 20 million by the year 2030 lies in pioneering battery technology. By using bigger cells and new processes to dry coat electrodes, Tesla could have the cost of the Model Y down by half when looking at its batteries, saving more than 8% of the car's price in the US. However, while this is an effective way to cut costs, Tesla is only halfway to achieving this, and the car company is having trouble scaling up production to full scale. That's because the new dry coating technique for these 4680 batteries is a new process, and it requires some time for Tesla to fully master the technology. Speaking about Musk's Twitter deal then, Wood stated that Musk's ownership of the social media platform is exactly what it needs. She stated she's quite excited to see what he does with it. She further added that she thinks the CEO of Tesla is going to work closely with Twitter founder Jack Dorsey, and may open up the ecosystem, taking away the censorship, making the platform a much more transparent and valuable ecosystem. Following the news of Musk's Twitter purchase, several Tesla stock analysts were skeptical about the deal, and many feared that it will have a bad impact on Tesla stock in the long run. This concern was further heightened after Musk backed out of the deal earlier this year. However, there does seem to be some positive news, as Musk has hinted that the deal is soon to be finalized. In a recent tweet, the Tesla CEO disclosed plans to make Twitter a huge advertising website. He said, "Twitter aspires to be the most respected advertising platform in the world that strengthens your brand and grows your enterprise." As opposed to previous opinions that Musk's Twitter deal may not be a proper decision at the moment, several analysts are becoming quite optimistic about it. Ark Invest Cathie Wood believes that Tesla is leading a transition from ICE cars to electric vehicles. Wood has previously pointed out that gasoline demand has recently dropped to levels that haven't been seen since the late 90s, and she added that it's a case of real demand destruction that could not have happened without electric vehicles. Electric cars have been leading in several automotive markets globally, and are taking a huge share of these markets from traditional automobiles. It's becoming increasingly obvious that gas-powered vehicles are slowly becoming obsolete, and Wood has stated that it is important for ICE car makers to figure out a way to mitigate and migrate away from that EV space, which is the next big phase. The stock investor also noted that several countries globally, like the United States, are already in a recession. Wood described the current economic recession as a function of this massive inventory overhang, which will have an inventory correction. She said, "This is a shock, though, to the system, and this idea that we have of inventory overhang, we think it's going to get bigger as consumers pull back." No doubt EVs are the next big thing, and Tesla is set to lead a global transition into autonomous driving and sustainable energy, which is its major goal. What do you think about its performance then? Do you think Tesla is going to continue to dominate the EV market? Let us know down below, and if you want to know what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.